Now, as Nigerians await the second quarter GDP figures, Temitope Olugbile, a research analyst at Financial Derivatives, joins me now to discuss the expectations and more. Thank you so much for joining us on the show.
Thank you for having me.
And of course, pretty interesting times ahead, but it just seems, lots of optimism here. I mean, I'm looking at EcoBank's forecast giving Sub-Saharan Africa 3.4% growth. Of course, we still have IMF's outlook, forecast for Nigeria for 2019 at 2.3. We have for 2018 at 2.1%. I believe the last figure we got was for the full year 2017. But what is your outlook really for GDP?
Okay, so actually the last figure we got for GDP was for Q1 2018, and that's 1.95%. So now going forward, looking forward to Q2 2018, we expect that GDP growth rate will remain relatively flat compared to what it was in Q1. And this is because if we look at output indicators such as the PMI, which is indicative of activities in the manufacturing sector, that slipped into the contraction region that is below 50 points twice in Q2. Power output was also epileptic. We are still below 4,000 megawatts per hour, and we've had, like, in Central power shortage. And then if we also look at oil production, average oil production declined between Q1 2018 and Q2 2018 by about 6%. So these indicators point us to the fact that Q2 GDP will be relatively flat.
Interesting. Now, if you make a comparison really within that period, of course, for Q2 and what we had in 2017, of course, which was a very bloody year really for most businesses, in as much as, yes, we did record some kind of growth in the first half of the year, call it the recovery period, but would you say we have actually made significant growth? What do you think has changed between then and now? Or are we still, call it, operating on the same platform and expecting, of course, something different?
So to a large extent, I'll say that we're still operating on the same platform, because if you look at Q1 2018 figures, oil and gas remained one of the fastest growing sectors, agriculture one of the fastest growing sectors. But if you look at the lagging sectors, interest rate and labor intensive sectors, they contracted in Q1, and so that's not much different from where we're coming from in 2017. The only difference is that, okay, the total growth rate went from contraction to an expansion. So that's really it. The sectors that drive the growth rates are still basically the same.
Now, do you foresee any aggressive policies that might turn things around, especially coming from the CBN?
So right now, I don't really foresee any policies that is so aggressive that would change the whole thing around. And so we'll still see that oil and gas would remain one of the fastest growing sectors. Our oil revenues are still pretty decent. And then we'll still see that agriculture sector would continue driving will be one of the drivers of economic growth rate. Lagging indicators will still remain real estate, trade, and interest rate sensitive. The CBN just maintained status quo 2 weeks ago or thereabout. And so interest rates still remain at what they are. So there's still the risk and the challenge of high borrowing costs to these sectors.
Just a bit on unemployment. How do you see that playing out in the second half of this year?
Okay, so the recent figures that we have for unemployment is still as at Q3 2017. And that came, so if you add unemployment and underemployment, you have about 40%. And so we're expecting the figures to come out by September, figures for Q4 17 and Q1 18. And so we expect that, because unemployment is a lagging indicator, so even if your economy is growing and recovering, there's still time. There's a time lag between when the unemployment figure will catch up with your recovery trajectory. So we expect that for Q4 17, we'll still see unemployment at a higher rate than what we got at Q3 17, because GDP growth rate is still below population growth rate. So we are churning out more graduates than there's a demand for it. So we still expect a high.
Hasn't that always been the narrative, really? And that's away from all the numbers that we're talking about, coming down to how, of course, how these translates, to everyday living. Like AFDB, president would say, you cannot consume GDP. It doesn't matter how high we put that figure to be. Let's touch a bit on unemployment, which is really key, honestly. I mean, if you do not have people working and making a living, it doesn't matter how it looks on paper, the situation still remains gloomy. Do you really foresee anything different happening? We're actually entered into election season. You heard the top stories, the intrigues that are playing out at the moment. You just answer that question, and you also do not foresee the CBN making any drastic, changes in this other part of the year. But what do you make really of the situation in terms of unemployment? What should we begin to do now? Or else we're going to have the same narrative in the next report.
Definitely. So I still believe to a large extent that we're going to have the same narrative in the next report, which is just a month away. And so unemployment, like you said, is a key indicator because it is one of the major components of the misery index. And right now, the misery index is only reducing because of inflation. So if you add unemployment plus underemployment plus inflation, you get your misery index. And the only thing driving it down now is inflation. And so I don't believe that in the next report we're about to get, there will be any drastic change. I think we're still going to be on the same narrative. And we also have to, like I said before, we also have to maybe give it some more time because there's a time lag. It's a lagging indicator. So maybe we need to give it some more time, or the government needs to really do something about it.
So, Mr. Since we're big fans of throwing numbers, so just talk me through what number do you see coming out in the next report?
Okay, so I definitely see above what we are currently at 40%, but then again, there's no specifics to this, so I don't really want to. So maybe between 40 to 50.
Fantastic.
That's unemployment and underemployment.
All right, for GDP as well?
So for GDP, like I said, relatively flat, so maybe within the range of 1.95 to 2%.
1.95 to 2%. I'll hold you to that, Temitope. Thank you so much for coming on the show. Temitope Olugbile there, research analyst at Financial Derivatives.